Hello, in this video we're going to go over what are pips and what are lots. It is very important for you to understand what pips and lots are in your journey to become a master trader. With the understanding of pips and lots, you can become a master trader. Without the understanding of it, you cannot place one single trade. The word pip stands for percentage in point. What does that mean? It means that a pip is the smallest price change that you can have on any given exchange rate. The increase or the decrease of a pip represents a profit or a loss in your Forex trade. Now let me explain. When currencies are quoted, they are usually quoted on the 4th decimal place. Any exception to this rule is when you're trading the Japanese yen or the gold standard. Those are traded in the 2nd decimal place. Let me give you an example of what I mean. Let's say you're trading the euro against the USD, right? Now, let's say the euro is quoted at 1.7028. The 4th decimal place is considered a pip, or is considered where you read the pip. Now, if the euro goes to the price of 1.7029, that increase on the 4th decimal number symbolizes the increase of 1 positive pip. Does that make sense? When you're trading the USD versus the Japanese yen, it's a little different because it's the 2nd decimal point. Let me explain. Let's say you're trading the Japanese, right? And the price is 70.21. The 2nd decimal point is now considered where you read the pip. So if the Japanese yen goes from 70.21 to 70.2, let's say 4, you just had an increase of 3 positive pips. This is important to understand because when you're trading in the Forex markets, in the very volatile Forex markets, these pips is what makes you money or loses you money. What are lots? Lots represent how much of a currency you are buying or you are selling. Pretty much the size of the trade. Think of it like the stock market and shares of a stock. If you buy 10 shares of Coca-Cola, you have 10 shares of Coca-Cola, right? So if you're going to trade into the euro versus the USD, you could trade into 10 lots, 5 lots, or 1,000 lots. There are 3 types of lots. Standard, there's mini, like M-I-N-I, and there's micro. The standard lot is traded at 1.0. The mini lot is traded at 0.10, and the micro lot is traded at 0.01. If you place an order with 1.0 lots or standard lots, every pip that you make profit is a $10 increase. Every pip that you got on the negative side is a $10 loss. If you place a mini lot, every pip that you make profit is a $1 increase. Every pip that you make negative is a $1 loss. If you place it on a micro scale, every pip that you make on a positive is a 10-cent increase. Every pip on a negative is a 10-cent loss. So let me give you an example. We're looking at the euro and USD. You're going to get into a buy order, meaning that you're betting that it goes up. For this example, we're going to enter at 1.2078. Now, in a matter of 30 minutes, the euro goes up from 1.2078 to 1.2098. Now, if you see the difference, right? This is an increase of 78 to 98. You just increased 20 positive pips. But if you place your trade in the mini lot, then that means that for every positive pip, you made $1. So you made a profit of $20 on that trade. Now, obviously, you risk more money. We're going to teach you that in the next video. But just understand that if you do the mini lot, it's $1 per pip. If you do the standard lot, it's $10 per pip. So in this example, you would have made a profit of $200. Now, also on the flip side, if it goes negative, for example, you sold, but let's say it went up, then you would lose that same amount of money. just something to keep in mind. We're going to explain it further in the next video on how to place your trades, but it's very important to understand what lots are, what pips are, and how to calculate every pip to every lot and every lot to every pip when it comes to making money with Forex.